Hello, everyone, and welcome to today's hot topic briefing on the topic of embedded finance and what that means for cross-border payments. My name is Camilla Bullock, and I'm the Director General from the Emerging Payments Association Asia. And for those who haven't met or seen from us before, we are the leading branch organization for the payments industry in APAC and really work towards a level playing field to enhance payments and through that improve lives everywhere. And we do those webinars to really get the industry together to talk about hot topics so that we together can move forwards and see what our role is to enable the industry to be the best it could be. So some of you might have seen, I actually posted a graph earlier today about the opportunity of embedded finance. I got this out of Forbes with the source of Lightyear Capital, and it is a big opportunity for 2025 in payments. And hence we think this is such an important topic and something that we will see and speak more about during next year. And to lead this panel as a moderator today, I have Anthony Morris. He is one of our ambassadors. We have a few ambassadors across the region that really helps us to deliver our program to connect us, and they really part of our brain trust together with our members, of course. We are by members for members, and we always turn to the thought leaders in the industry to drive the topics. So we're very pleased for CurrencyCloud to supporting this webinar today. And with that in mind, please pop any questions you have into the chat as we go and ask in the Q&A. And Anthony, I'm going to hand over to you to lead this panel and to introduce the panelists.
Thanks a lot, Camilla, and delighted to be with you all this morning. I'm joining you from Hong Kong, and we've got a very distinguished panel today. So probably without further ado, I'll ask them to introduce themselves and perhaps to get us going on embedded finance and cross-border. Maybe each of you, you've all had distinguished and are continuing to have distinguished experiences in this space. Maybe just give us one awesome example of embedded finance or payments. Perhaps starting with you, Natalia.
Oh. Am I going first? All right. Hi, everybody. Nice to meet you. My name is Natalie. I'm based in Tokyo, and I currently am the VP of Corporate Development at Infocurion. Infocurion is a company you've probably never heard of because we're still mainly in the domestic market, but we operate merchant solutions as well as a banking as a service platform. And I guess my example of a great embedded finance service is on the B2B side. So we recently launched business cards for SMEs and sole proprietors with our partner Money Forward, which is a accounting as a service platform, and it allows for customers to sign up for a prepaid card, but with dynamic funding sources. So it's prepaid where they pre-fund first, but if they get if they're approved for credit, they can actually do post-pay. And also it allows you to implement spending controls, and it's all integrated into the accounting platform. So you don't need to download a account statement and then put it in, send it to your accountants and work it out. So in a lot of ways, it solves a lot of problems for sole proprietors in simplifying, one, being able to pay your business expenses, and two, integrating it into your accounting. So yeah, that's, I guess, it from me to start.
Thanks, Natalie. And I actually think in lots of ways the card schemes originally coming out of the US and solving cross-state problems are a wonderful example of cross-border embedded, because the fact that we can, whether it's buying things online or going physically to places, and the whole system works across the banking network is a great example. And you're right, new providers like yourselves are adding technical integration capabilities on top to embed it further in companies. Rahul, perhaps you can introduce yourself and share what you think is a wonderful embedded finance or payment experience.
Sure. Good morning, everyone. Thank you for having me on the panel. Delighted to be here. I'm Rahul. founder and CEO of TazaPay. We are a Sequoia-funded startup which we started last year, focus on cross-border B2B payments with a specific focus on creating trust in these transactions through a digital escrow mechanism. My background has been in payments almost all my career. I was at Stripe before this, leading growth for Asia. And prior to that, spent almost a decade at PayPal, running Southeast Asia as well as Japan. And there are quite a few good examples to choose from, but perhaps the one which I have seen at most scale is Shopify. Shopify is an e-commerce platform, enables small merchants to set up their e-commerce stores. And when they got into payments, they decided not to do it themselves, but leverage a white label solution from Stripe. And they have Shopify payments today, which potentially generates hundreds of billions of volume, but it's all powered by Stripe. And I think that's on the surface. What happens at the back is really fascinating. Whenever you're offering embedded payments, it's the embedded payment service provider has to take all the onus of not only the front-end user experience, but onboarding, KYC, compliance, and all that good stuff. So that the service provider who's providing the embedded service can make it look and feel as if it's their service. So I think that probably is one of the most at-scale experiences that I've seen.
No, that's wonderful, Rahul, and congratulations on co-founding a Southeast Asian B2B, and and actually embedding escrow in there is one of the themes that we've seen coming out of it. Was actually what was critical for Alipay to succeed, and obviously PayPal where you were before. And I do love the Shopify, Stripe, and making life easy for both the small merchant plus their customers, but actually hiding all that complexity away. Rohit, last but certainly not least, lovely to hear from you about where you are now and what your favorite embedded experience is.
Sure, Anthony, thank you very much for having us on the panel as well. So quickly, my name is Rohit Narang, based in Singapore. I'm leading the entire APAC build out for CurrencyCloud. For those of you not very familiar with CurrencyCloud, we are a B2B2X company, which delivers the capability to move money across borders and transact globally in multiple currencies, and all delivered through APIs. My background prior to this, I spent about 18 years in financial services across investment banking and private equity. I spent the last few years then co-founding a tech startup in the credit scoring space based on alternate data, which also got backed by Sequoia, fortunately, as well. And now, of course, taking the role of kind of building out CurrencyCloud in the region. Thinking about examples, one of the things in our own backyard that I've seen evolve and seen the power of actually embedded finance actually has been Grab, in my view. It's one of the perfect examples, quite frankly, where the journey began literally by embedding seamless payments into transactions. But what a great segue that created to going deeper and deeper into the financial service stack. And I think that's one of the things I always look at and marvel at from my side on where this could lead to and the power of it to where it can go to.
Wonderful. Thanks, Rohit. And yeah, delighted to have you all here. And Grab, of course, listed was a couple of weeks ago. Very successful coming out of, like you say, doing one thing really, really well, adding payments and then expanding out. So as I mentioned, I'm based here in Hong Kong, and probably early 2000s, which was quite a long time ago, I sort of had my amazing embedded finance experience, and it was with eBay, and I had an old Mac and I was missing a cable, and I found somebody in Argentina that was prepared to sell it for about $10 US. And amazingly with PayPal, which at that time was still embedded within, I think it was within eBay, can't remember exactly when it spun out. Actually could do the transaction instant, and that was it. And the cable got shipped across. I remember at the time, because I just left HSBC. And at that time, I couldn't transfer to myself in the UK. So I was actually, to me, in the same bank without a world of pain, at least $20 US of fees, paperwork, and a few days delay compared to this instant payment. So from my perspective, that's 1,000 times better in terms of the experience I had. I don't even know how I could have sent money to Argentina at that time. So that's sort of my favorite experience, and I think making people's life easier, which is a common theme, and the hardest place is actually on cross-border and embedding. But Rahul, I know you spent many years at PayPal. I'd love to get your insight, because like I say, 1,000 times better experience. PayPal must have really done an awful lot under the bonnet to make that so great for people like me.
That's right. And actually, that's a great example of being an embedded payments experience. PayPal's history was it started as a peer-to-peer payment service, and it really found its product market fit on eBay, which was really made to order for a use case like that. What you explained, is so much behind the bonnet of being able to easily onboard. You look at 1,000 parameters when a customer does a transaction, doing all sorts of fraud checks, KYC compliance. One of PayPal's beauty in the early days was the ability to onboard almost anybody and get them set up for payments in flat 15 minutes and take away all the complexity that the banks used to put on customers around onboarding, KYC, compliance, fraud checks, etc. So I think that was really their secret sauce, their inherent risk management system. And continuing with that story, PayPal went on to eBay. Almost all the revenue was from eBay. And when I joined PayPal in 2009, there used to be an on eBay team and an off eBay team. An off eBay team was ones who were doing business outside of eBay. And then we said, we have to change our name. You can't call yourself what you're not doing. And so we called ourselves services. And that essentially became 90% of the revenue in the next 4 or 5 years. It was a fascinating example in many ways of how most successful payment companies need a flywheel. Yes. PayPal had eBay, Alipay had Alibaba or Taobao, GrabPay has Grab, and Paytm had Uber. So there's always this need of a payment company to have a hitch or a flywheel, and that's such a beautiful ecosystem there.
No, that's a lovely reflection, because you're right. We'll forget now, because PayPal is so much bigger than eBay, that actually was the genesis and what gave momentum to the flywheel to then actually let that 1,000 times better embedded experience appear everywhere else, and that becomes much bigger part. And very interesting what you said about the really tackling that complexity of the onboarding and the KYC and everything associated that with, and there's a lot of this around a very sort of fit for purpose risk approach, and actually accepting some of the risk. PayPal actually took a few punches to the stomach early on. I remember in the very early days, then recruited a lot of, I think it was ex-Citi risk managers, and then really got on top of it. So yeah, that complexity, I know Rohit, CurrencyCloud, that's something as a B2B2X, as you described, that you really focus on. Perhaps talk a little bit more about because cross-border, especially, you're moving large amounts of money, not always linked to a easily identifiable transaction. So perhaps you can talk about some of the complexity that you have to deal with.
Sure. No, thanks for that question. So I always kind of be very clear about what are we in the business of, right? And how we describe that defines what you really do. And the way we articulate it is we're in the business of accelerating time to revenue for our clients, right? As a B2B2X, that's the most important thing for us, to help them to at least serve their customers far better. And that could be for our businesses, our clients, to be, either through new product launches, new corridors, new geographies, the case might be, right? And our APIs then provide a one-stop shop to provide all the capabilities needed to move money around the world. But if you break down behind the scenes, we're actually providing 3 things. First is a license and a regulatory cover. Second is a platform, which basically allows us much be seamless, straight-through processing transaction and dovetail into their own systems very well. And third is a network to actually move the money. Now, clients can come to us for any combination of these, right? One or the other, or all 3, as the case might be, depending on the need as they might have it. Now, the reality is all of these three capabilities are actually extremely slow to build, right? It takes time, and there's a lot of complexity to the point you're making, Anthony, of different nature. Regulatory changes, like Rahul was saying, AML check, KYC checks, and these complexities are what we handle at Aram, and make a product out of it, and deliver this capability in the quickest, cheapest, and best value and the best customer experience, right? So they don't see behind the scene what's happening, but see the final output and return of that. As you can imagine, so what we do is we simplify all this complexity and deliver to the API, right? And our job, I feel, is to constantly solve for the best network, best regulatory cover possibilities, as these regulations are changing as well constantly for all these countries as well, a global coverage, and the best pricing, right? And that's what we do from our side, and that takes care of all the complexity.
No, that's wonderful. And I think in my experience, there's the hardest thing is removing the complexity and not making it visible to either the partner or the end customer. And I'm a great believer in, I love what you said about the fastest time to revenue, because people forget that actually the payment is the trailing thing. It's actually unlocking the service that the customer really wants. And then that's what the payment's there to do. In terms of, Natalie, in terms of regulatory complexity, you're coming to us from Japan. Perhaps, and I know you've got a lot of experience with Payoneer before in the region. Perhaps you can talk to us about that, because this feels like another order of magnitude above, say, Europe or America, or where a lot of people cut their teeth.
Sure. No, so I think the Japanese market in particular is one that everybody thinks is difficult. And I think there's a bunch of reasons for that. Obviously, the language barrier, cultural barriers, and then the regulations are, I think, different. Like they've been built from a different perspective than Europe or the US. So a lot of global companies have a hard time processing it. But at the same time, it's a market that is actually, once you understand the language and get through some of the, I guess, initial interpretation issues, it's still transparent and fair. Like any company can obtain a payments license, like pretty much any license. Like banking, I think, is restricted, and it's restricted in a lot of countries, but like the rules are the same for everybody, which I think makes it actually a fair market compared to some in Asia. But I think a lot of companies look at the Asia region and say, well, we just want to launch across Asia, but compared to Europe, where you have one set of regulations that covers 35 or 36 countries, in Asia, each country has different regulations. It has different infrastructure on the payments, like the payments rails, et cetera. And so you really need to look at each market and understand, well, one, is the opportunity worth it? What do you need to localize your service to actually get it off the ground? And then three, generally, like, as Rohit mentioned, like you need to actually maintain, you have to keep up with the regulations too. So it's not a one-off investment, it's a continuous effort to, I guess, launch and grow your business in that market. And so obviously that can be difficult to like obtain licenses and meet the regulatory requirements for every country. So in that sense, I think based on my experience at Payoneer in particular, it makes a lot of sense to partner with locally strong regulated payment services if that's what you need, instead of doing everything yourself. And so finding that balance in your strategy in this region can be quite a difficult challenge. But there's obviously a lot of growth in this region, so there's a lot of opportunity as well.
Thanks, Natalie. And I think that's actually the partner piece, I think, is a really important point, and perhaps something that the outside of the industry isn't well appreciated, that there's so much complexity, as you said, around actually everywhere, but the region in particular, that this approach to cooperating, so we all actually have a bigger and smoother and more efficient system, is very much part of payments. And then obviously competing at the top, but you've got a couple of the big sort of high profile, whether it's Air Wallets or Neatio, who's actually much smaller, but just been acquired by Rapid yesterday. But those are both people that I know CurrencyCloud would support. So there's a lot of, like you say, there's a lot of partnership and collaboration, as well as that sort of layer where the organizations compete. So I think it's accelerating, and I think we've been very fortunate over the last 5-10 years to see a number of enablers come that are really letting the embedded cross-border progress. So perhaps each of you in turn just pick one of those big enablers that really is driving this whole area of the industry, and perhaps starting with yourself, Rahul.
I think the one I am most excited about, which has been a development in the last 2 to 3 years, is embedded credit. And the ability for a platform like ours to offer white label credit to another partner, I think really helps us differentiate. And a lot of things have happened in parallel to enable it. One is with European open banking and AIS, they just enable very, very effective and transparent underwriting. So the underwriting skill is no longer a major differentiator. And so it really makes sense for us to work with a white label provider. We work with a company called TreviPay as an example, which allows us to white label credit for customers in North America and soon Europe. And I think that I'm finding is probably one of the biggest catalysts for embedded payments and embedded finance in the next couple of years. Embedded payments has always been there. In the sense, we are also a great example. My own platform, TazaPay, we focus on providing trust and security. And then we work with partners like CurrencyCloud to do the hard work of collecting payments and disbursing payments, whereas we can focus on what we are really good at, on curating and orchestrating an experience, providing trust, security, providing the APIs. So similarly, so that's something which I'm really excited about.
And both of those, I think, are lovely examples of this partnership approach. And there's more than enough to be done in terms of giving trust and confidence to the end users, that it's actually where we can collaborate as an industry. That makes a lot of sense. And I do like the embedded credit, which is probably traditionally the hardest. Actually, it's the hardest bit of the process. So a payment, generally those type of checks, well, it's either going to be funded or if there is credit, all the checks will have been done a long time ahead of time traditionally. But actually, if you're doing embedded credit, then that's pretty tough, and particularly if it's, we've got a bit of cross-border going on in there as well. So yeah, that's a great example. And of course, and coming back to Rohit's comment on helping partners get to revenue, a lot of the original drivers for buy now, pay later, particularly Klarna and Afterpay, is actually to help that checkout get through. And the fact that there was I know there's a bit of a debate, but call me old-fashioned if you're delaying payment, it sounds like a credit to me. That crediting decision, whatever people say, helping the the online sellers get that a bit more trust and confidence, so that they can make more revenue, has been very successful. So maybe from your point of view, Natalie, what do you think has been the big enablers, or one of your big enablers to embedded and cross-border?
Sure. So I guess I think going with some Japan examples, there's a lot of I guess payment technology that actually came out of the Japanese market on the NFC side, starting with Suica or with QR codes, and they were actually developed quite early. And so it took a while for them to come of age and actually take off. And I think the Japanese standard for NFC in particular became Japan was when I first came to Japan, and you could use it I guess the Suica to ride the train or pay at the convenience store. That was quite ahead of its time, and it took a while for it to come around, and they didn't manage to quite sell the Japanese version. So type A, type B actually ended up being more popular globally, but that innovation kind of created a new trend globally. And I think same thing with the QR codes. I think they developed it quite early, and it was a Toyota subsidiary or something. But from there, like eventually it became a quite common thing. And then there becomes like domestic standards and global standards. And so like an innovation doesn't always come, like the timing of it, I think becomes quite important. But once it takes off, like I think so many people, particularly with COVID in Japan, obviously has a very high ratio of cash-based transactions. Like COVID kind of forced everybody to try to go digital. So it's been really interesting seeing how those take off here and also across various countries all over the world.
Thanks, Natalie. Yeah, those are both great examples. And you know, I was fortunate enough to be at Octopus when we were pioneering the early version and taking advantage of Sony's technology on the NFC. Yeah, sadly, they decided not to share everything, which meant the Type C standard never really made it, which is a shame. But in terms of influence, they directly influenced, obviously, automatic fare collection systems like Octopus moving into retail, directly influenced. The only reason contactless on cards came about was actually a response to that. And you know, and then obviously we have Apple Pay, who then simplified everything. And then QR has transformed, you know, especially coming out of China, payments, and now is cross-border and phenomenally quick and easy, another 10 times better. Rohit, perhaps with a slightly different perspective, what do you think has been the big enabler of embedded payment and finance?
Yeah, no, I think it's a great question. And obviously, it's a bunch of different trends coming around the same time would lead to this, you know, massive super wave. But one of the things that kind of appealed to me was, if you think of banks kind of having the main domain expertise, and as fintechs are coming into being, banking is getting more democratized to people through these fintech companies. And I think one of the major changes has been the development of the entire API economy, you know, which has been quite commendable. I think, you know, now you have companies which are, you know, best in class in what they do, and much to the point we were making earlier, take away all the complexity and provide you simply, you know, provide the end result through the API. And these become significant building blocks now for any fintech to deliver anything. So to get, now you have this bunch of these blocks coming together, you can plug it all together, test it in the market, fail, quickly learn, retest, recalibrate, and do it again all over again as well. And I think that capability to put these blocks together, which is thanks to the entire AP economy, has been one of the most powerful movements. And I think hence you will see a lot of these, you know, fintechs coming in, using different blocks, trying different things, and kind of you know, finding their own niches, as the case might be. But I think the big enabler has been the entire API economy, where you know, it's basically somebody's extremely focused on providing best-in-class solution for you, so you can go and solve customer problems of your own.
Rohit, I think that's actually, that's almost like a tidal wave of enabling, isn't it? And it's under the, again, it's hidden away, but it's what engineers, developers, engineers, it's actually how they work. And I still remember this, they don't bother meeting people. They'll, they'll just go to the APIs and off they go. And I was fortunate in helping HSBC's copy of Venmo, which actually isn't cross-border, unfortunately, but does take QR codes, and we built the API, helped them build the APIs. And one of the really important concepts as we were doing that was actually, frankly, to copy Stripe. And we had a whole stream on the developer experience, because actually, if the developers don't like the API experience, doesn't matter what anybody else says, it's just not going to work. So, and maybe Rahul, obviously you spent quite a while at Stripe, and they are still the reference for making life easy for developers and therefore people in the online. So maybe talk a little bit about that, because like I say, it was the inspiration for us when we were working on this.
I mean, inspiration for a lot of people. I remember back in 2013, while I was still at PayPal, you go to their website, it was blocks of code, and essentially you could copy from the homepage and paste and get going. And they were really the first ones to do it. And now almost everybody puts their APIs up front, and gone are the days where somebody sends you a PDF with their API document. It's there, you can try it out. And really, I think even what we are seeing is the decision makers are the developers, and they don't want to meet you. They don't want to hear your pitch. They don't want to hear your narrative or story. They want to try your APIs and make a decision whether it works or not. So we've spent an inordinate amount of time trying to open up our APIs, and that's really the way it is. It's going to be. You look at most top end fintech companies, whether it's Marqeta or Stripe, they don't show any fancy graphics on their homepage. It's like, this is the code I have. You can copy it here and get going, and hide all the complexity of real payments and real finance behind those 7 lines of code, if you may. I think this is fascinating.
Yeah, and I think the other thing, again, this is probably a little bit just the next layer. What was also beautiful there was here, take the code, test against here. So here's a full test environment. And then when you're ready, we'll, sign up, put your credit card in or whatever to pay for the use of the APIs. And here's the live key, and just stick your live key in and off you go. And I think people underestimate the importance of that. It's what in the accreditation and ability to have confidence. And again, that's all part of the developer experience. And you're right. This is how you embed things, and everything starts accelerating. So, yeah, I think Stripe has inspired lots of people.
The thing which was very interesting was any fintech, finally they work with a bank at some level, right? Your APIs can only be as rich as the capabilities the bank offer you. So at some stage, you would it's a very lumpy experience, beautiful experience to some extent, and then suddenly it'll become manual. And as a result, the more new age companies have taken a call, let's get as close to the metal as possible, so that we can in payments, for instance, most payment companies would work as a payment facilitator, work with traditional acquirers, because it absolves you of a lot of regulatory and licensing issues. And but the problem is that you're limited by their capabilities. Visa, Master might be enabling a whole host of capabilities on their backend, but it's not available to a payment company because the bank hasn't enabled. So the last 2-3 years, there's been a huge shift of people going direct to Visa, Master for cards, people going directly to banks for both financing and as well as payments through open banking APIs. In Europe is a great example with the PSD2 APIs. So I think this thing about the source really opening up their APIs so that fintech companies can go directly to the source is probably what is a trend I foresee in the next few years.
Yeah, and I think, Rohit, obviously, CurrencyCloud built itself up in Europe, from the UK and into Europe. So, does that reflect your experience as well, that you're beginning to see, CurrencyCloud getting able to get closer and abstract some of that complexity away from because at the end of the day, we have to find regulated entities, certainly in this space. We'll come on to a space which is a little more interesting in a minute, but certainly currently what we're doing, you're the bridge to those regulated entities.
Yeah, no, actually that's Rahul made a great point there. And I think jury's out on some of this stuff on how this will play out. I think the directionality is clear. The pace and the extent remains to be seen. And not to say, and there's some, banks or organizations which are moving quickly versus others the case might be. But inherently, the scale that they operate at does make it harder, and the way that for them to do it in a much more nimble and agile way. And I think that's something that we end up spending a lot of time with many of such, network partners from our side as well. And we try to abstract that even more and simplify that even more to the extent that's possible, right? And it's always tough to move big giants for that purposes, but I think that's happening more and more now. So while more of them are going to open, but I'm still suspicious of the extent of it and how quickly it'll happen, right? As we go forward. That being said, we are all eternal optimists, as we need to be in this business as well. So I think we'll all work at making that happen as well.
I was chatting with somebody I used to work with in this space back in the UK, and one of his observations, which I hadn't realised, was whilst the UK, its version of open banking, which was actually driven by the Competition and Markets Authority to force the banks to open up and enable a whole range of other people, including obviously yourselves and all of us around the table. His observation was the bit that they missed was actually letting the banks earn revenue from running the APIs, actually the economics. And the reality of running, and obviously whether it's yourselves, all of yourselves, actually these are expensive things to keep up and running, of course, because there's big systems and capabilities behind them. So his observation was that is something which, whilst they force the opening up, because they don't have the economics, and to your point, those big banks are sat there going, well, it needs to level up a little bit. Now it'd be very interesting to hear, again, coming back to Japan, and maybe it's misperceptions, but where's Japan, the Japanese banks and payment providers on that journey, Natalie?
Yeah, so I think Japan, slightly after PSD2, also created new laws around banks for doing APIs, but they didn't make it mandatory. They made it it's kind of a best efforts basis law, which happens a lot in Japan, which has pros and cons. So there are some tiny regional banks, but where there's probably not a lot of need for them to issue APIs, and therefore they're not forcing every single bank to do it, which potentially makes sense from a market perspective. But because it's a best effort basis and the banks get to take the lead on how they issue the APIs, and when there was a timeline, and I can't exactly remember, but anyway, so they were supposed to already have launched them, but what they do now is they actually do charge quite a bit to access those APIs, which therefore kind of half defeats the purpose, because it's not going to scale, because only large companies can afford to pay the banks for the APIs. And so the revenue piece, it's hard to find a balance. I think from a consumer perspective, Europe is great, because they regulate the pricing for a lot of the infrastructure, and so the cost of making a bank transfer is a lot cheaper. Japan with Zengin, it was I think one of the first real-time systems, and starting in 1973. But then it didn't upgrade for a long time. It's now 24 hours, but it's a lot more expensive than most other countries. They recently, actually in October, the government required that the interbank fees went down, so they came down to below 100 yen. But compared to the ACH in America or in Europe, or I think in Singapore, where it's a couple cents per transaction, 100 yen is still a lot of money. So there's, I guess, a lot it's interesting, because I think they pace themselves on, the regulators and the government here pace themselves in introducing new changes, which has positive and negative effects.
No, that's very interesting, and you're right. It needs to be, actually, ultimately needs to build a business case for the banks that they can actually run a business around the API. So neither nothing nor too expensive, because obviously we're running a different agenda. What we have seen around, we have seen some quite directed pushes around faster payments, certainly in the real-time retail in particular, particularly making it easier. So you're hitting a mobile number or an email rather than certainly for me, impossible to remember account number. And also it's just a bit weird, if I was to.
No, you didn't have to ask somebody for their account.
Exactly. Yeah. I mean, it's a bit weird to go, oh, what's your account number? Whereas, if Venmo, if I wanted to send you money, actually, if we're on WhatsApp, I'll just send you.
I already know. Yeah, you already know somebody's email or their their mobile phone. Yeah.
So I think we've seen that, and we're seeing some quite strong pushes, particularly from the stronger, more forward-looking regulators like Singapore, where they've actually linked up with the real-time system in Thailand. So I believe from the bank accounts in Singapore, you can transfer straight to effectively a mobile number or an email over there. So so I think we've got a whole new group of people coming into competition. We've obviously got these that are being pushed, which means the traditional players. We've got, I'd actually argue, we've got the the big tech fins, i.e. these big players that are just awesome at tech, and actually adding finances is actually integrating an API and off they go, and again collaborating. And then perhaps the other one that's emerging in terms of making life really easy for developers and and actually sitting in that strange space at the moment is the whole sort of crypto DeFi area. So maybe picking those three competitors and maybe starting with yourself, Rohit, which pick one of them and then perhaps give us your thoughts, and then we could go around the table. And I'm not sure who's going to be left with the third one, but perhaps pick one and give us your thoughts of this competition again, against the fintechs, which you all sort of represent, who are shaking up this space.
No, I think I'm the lucky one to go first on that, for sure. But no, listen, I think to the point you were making, Anthony, if you think about the payment infrastructure itself, the core payment infrastructure, and I might allude a little bit more to cross-border businesses right now, there's a lot of work ahead of us to make them better, right? Cheaper, faster, more transparent, efficient, all of those things, right? And some of the work is already happening, right? Which is bilateral in nature. So the point you raised about between Singapore and Thailand now, the transfer is driven by the two central banks, and that will span across in the region for sure. But one thing is fairly clear to me, at least from my perspective, is that this payment infrastructure will morph at a reasonable pace, if not rapidly. There'll be different things happening in different parts of the world. You very well might see actually in APAC, what QR code did to payment rails in Asia versus the Western Hemisphere might actually happen in this part of the world as well, considering cross-border payment. But if you look at true payment infrastructure, there's something to be said about whole DeFi, digital ledger technology space, right? It does solve a lot of problems in terms of all of the points I mentioned in any case as well. Now, there are clearly headwinds. There are compliance, regulatory, there are massive headwinds. So we have a long distance to go ahead for them. So the technology exists of the pain points. I do feel as more acceptance starts happening over a period of time, possibly with the regulators, and we put the right guardrails around this to make sure we work and confine to the compliance requirements, this can be quite a meaningful infrastructure that will get laid out, and hence it's a fairly credible threat. Now, with each infrastructure, still there's an opportunity to build on top of that, right? It's not like opportunity goes away. You got to get better and more precise at doing what you're doing, solving pain points anyway. But I do feel that the digital ledger technology is a fairly credible threat, in my humble view, if I take next 5-7 years.
I think that's really interesting, and I think the instant finality of the transfer has a lot to go for it. How the regulatory bridge is built, and actually I think that's some really interesting space that we're seeing a lot of activity in, is those what I'd call the on-off ramps to then enable this incredibly especially for higher value. At the moment, frankly, it costs me about $100 to move to move 50 US of activity given Ethereum gas fee. So we're not there yet, definitely, but the finality and the and the confidence of what's happening, if we can get the regulatory on-off ramps, I think is certainly something to watch. So maybe Natalie, of the incumbents, the banks or the tech fins, who do you think, what sort of competitive threat do they present to because they're certainly not going to sit there and let this happen to them with just the fintechs.
Yeah, so I'll take on the banks. But no, so I think banks, obviously the existing infrastructure is generally not bad. And so working off of that, they obviously have the capital to build new infrastructure and new services. They're not always good at the innovation side, which is why companies like ours help them in building new fintech services. But at the same time, they because they have the trust. I think the trust is a really key piece in the end of like, especially when you're holding people's money, like payments, and like when it's like a straight through processing, or like you're not holding the funds, like people are probably more willing to take risks than they are with like who's going to actually hold their money. So I think the banks still have a stronghold on the trust side. And they also have the capital to, if they can't build it themselves, invest or into the fintechs. And then effectively, in the end, all financial services tend to be commodity services. It's very hard to patent. It's very hard to make it all your own and take everything. And so it's a question of who can move fastest. And like by either working with fintechs, like building their own, acquiring or investing, like I don't think they're going to lose their dominance in the short, particularly in the short term. Like, I think there's always going to be a place for them.
Yeah. And no, I think, and you're right, the trust part, this is people's life savings that potentially, depending how it's structured, but that trust piece is significant. And you're right then. And we're seeing collaboration with fintechs, or just out and right purchasing, if that's the way they want to go. Or I think HSBC's just finally set up I forget what it's called now, but their cross-border capability, which they've kept hidden away up until now. And of course, they have the connection straight from the wholesale markets all the way down to their end customers. So Rahul, it looks like you've got, sorry.
Oh, sorry. Just, one last point. Like, I think the other thing is like the regulations are going to, like the banks are going to have like a special place based on the regulations as well, which will keep them safe. And I guess in that sense, like the banks are safe, but like, and that's why you see like as fintechs get bigger, a lot of them end up getting banking licenses because it allows you to do so much more. So I think like banking and or banking licenses, I think is going to keep a key place in the market. Sorry. Last comment.
No, I think it's good. And we actually had a very interesting, we actually had a fintech here. Well, actually we've had a fintech here, which was WeLab, go and acquire a bank in Indonesia, or announce acquiring a bank in Indonesia. I think it was yesterday actually, or the day before, a small bank, but giving them the licenses. And then actually the Indonesian fintech, big tech, or tech fin, probably is probably a better way to describe it. Well, it was Gojek, it's now GoTo. They equally took a big stake in a licensed bank. So maybe use that as a segue into what's the competitive threat of the big techs, Rahul, in your world?
Yeah, since the more obvious ones were taken up, I'm only left with metaverse, but I'll not talk about that. The good part about being a startup like us, which is 1.5 years in the journey, you tend to have 1-year horizons of survival and finding product market fit. A lot of the things which I mentioned probably have a 3-4 year horizon, especially since we are at the confluence of trade and payments.
Yeah,
it's often said that blockchain and DeFi is going to disrupt it. And I often say that I probably have a better chance of growing a full head of hair than blockchain succeeding in the next 5 years. It's just a very long process of creating consortiums and getting everybody on board. It'll happen, but clearly outside my planning horizon. So I don't necessarily worry so much about it.
Yep.
I think there are quite a few interesting things which are happening in our space. One is the real-time networks and the linking of the real-time networks. And it's both a competitive threat as well as an opportunity to ride on it. Pay now getting integrated with the UPI, which is getting integrated with the PromptPay. So one can foresee a world where all these real-time networks are integrated and you can send number to another phone number across borders. But I also know that there's a lot of bells and whistles which need to be built around money transfer. Moving money from point A to point B is one thing, but building the onboarding and compliance framework around it, and the transparency, giving a dashboard, etc., is quite another. So therein lies a competitive threat as well as an opportunity. Also, a lot of these real-time networks are not built for B2B. They're largely retail payments. So how does a company like ours, in partnership with CurrencyCloud, figure out a way to make it a truly B2B payment option for cross-border trade, which is something which is top of my mind. So these are some of the one thing which I worry about it. A lot of our fintech businesses are based on the inefficiencies of the banks, because they've not got their act together, also because they've got so much regulatory pressure. But if they really get their act together, they can disintermediate a lot of the fintechs, I think. I think that is a little bit of more of a short-term worry. But I sort of feel that we need to partner very closely with banks. Finally, you can't compete. I mean, no fintech in the right mind says they compete with banks. They all need the bank as their backbone. So it's just about finding those right set of partners and bringing the service together. So roundabout answer. Nothing in the next 1 year worries me apart from my own existence. So
yeah. So I mean, I think so. Another way of saying that is there is such a large opportunity to make life easier for your end customers. In your case, the trading SMEs. There's so much simplicity to introduce and through partnership, whether with people like CurrencyCloud or the banks or a combination, all the schemes. There's so much complexity to hide away in order to do that. Yeah, there's more than enough opportunity for you. I think that's the positive, and actually I think it's absolutely true. There's an incredible amount of opportunity in both making life easier through embedded and actually making cross-border fast, efficient, transparent, and cost-effective. So perhaps opening up, Camilla, I don't know if you've seen if there's been any questions from the audience.
No, it's been a very, very quiet audience today, but I do think it is because it is a very interesting topic. And at least me, my thoughts are going all the way of what is actually possible. I often refer to all those conversations. It's like Excel, it can be done, but you just don't know how to do it. So what actually opportunities will embedded finance open for? And I think that is what we see in this big number and projection and how big the embedded finance market will be in 2025. So please, if anybody have any questions, just pop them in quickly there while I is going to reflect a little bit more, because it's been a very interesting session, and it's a topic very close to heart for me, because I love what we're doing in this innovation. How can we improve things, and not just to B2C, because we often get stuck in those conversations, but it is really in that B2B market also. And this year, I don't know how we're going to look back on this year. I feel like it's still, the domino bricks hasn't fallen. We don't really know how the world looks like. We don't know what's going to happen with DLT. We don't know what's going, so many things that's out there still, like digital identity. Will it be national schemes? Will it be interoperable? What can be created if we come together? And I think Rahul is saying something very important in this, like the time frame. How far are we looking? Are we looking at stepping stones to the future, and how big steps are we ready to take? And I think it's just roundtable workshops and partnerships that will take us there. One thing that we are talking about in the EPA just now, and we have an exciting year ahead also, we're making a few organizational changes. We have a new head of policy and advocacy coming on board, of policy. So you will see lots of increase in our outputs and more targeted outputs. And we often talk about the pointy end and how we get the full industry in, but how do we actually move the dial? But the word that you will hear more about next year is access. And I think that is resonating what you're talking about today also. It's not just access to data and infrastructure, it's also access to people and access to understanding, I guess, to see where we'll land. So, yep.
We've got a couple of questions. Maybe taking Lance's first, because yeah, Manish, you're right. We didn't use the 3.0 directly, but we did sort of cross-reference it in both Rahul's and Rohit's comments around distributed ledgers and that side, but we can come back to that. But perhaps picking up Lance's comment, which is incredibly topical as we watch one of the Western big techs, Amazon, decide to take on Visa head on. Now, obviously there's some merchant acquiring in there, but in relevance to this conversation, question to the three of you, are we seeing signs that basically the fintech competition as a whole, or the, and fintech, and I put tech fins as well in there because they've got more muscles, are gonna, another trends you've talked about of competitors are gonna force Visa, MasterCard to lower their FX margins. I don't know, who would like to start off with that one?
I don't think so. The public listed companies, it's FX is a very healthy part of their margins and EPS. Even a 1 BIP reduction will show up on the EPS, and you've got to manage your street and investors. So even though a lot of people internally argue about cannibalizing your own revenue before somebody else cannibalizes it, but it doesn't really cut ice when a CFO has to make quarterly projections and face the earnings call every quarter. So I've seen this firsthand. FX is a drug. I heard that at PayPal for 10 years, that drug, we got to get off it. But I didn't see them get off it for 10 years, and I don't see them getting off it for the next 10 years. It's incredibly challenging. When you use a credit card for cross-border, most people don't know how much they pay. It's as high as 3.8%. And I have seen it go up every year for the last 10 years, and they will slowly increase it a couple of bips here and there. So I think it's a very powerful drug. These guys will not get out of it for a very, very long time.
Yes. Sorry. Yeah, so I don't know that it's going to be the fintechs unless there's like a huge risk of disintermediation, where they really think that the volumes are going to come down if they don't bring down their FX rates. Like what I think where the pressure is going to come from is really from a regulatory perspective. So there's obviously like the G20 targets of bringing down the FX for cross-border transactions. And I think the regulatory pressure is more likely to force them to reduce their pricing versus competition from fintechs. And I think that's like effectively what happened in Europe. It's what happened in Japan recently with the Zengi fees going down. Like, I think that'll be a much bigger pressure point when it comes to, I think it'll eventually come to that if the G20 actually manages to push through these initiatives on lowering the cross-border costs.
And of course, yeah, we've seen the precedent with interchange. Rohit, I think CurrencyCloud has services where you try and help customers not to pay up to the 3.8% that Rahul.
Right. No, while I completely agree with Rahul on a big company behavior and cannibalizing incoming, already existing revenue, but I do feel, small little fishes nibbling on the large shark. At some stage, the small fishes kind of add up so much pressure is going to happen. Now, when that happens is hard to tell. I think the trade-off between a good and a great company is exactly that. When you give up the short term to start thinking a little bit of the medium term from your perspective. Just case in point, I don't know if somebody try, if you go check out at certain point, at certain places, you actually sometimes get different currency options as well. So you could pay, if I buy something in US, I'll get a $6 option and a US dollar option as well. That FX is not going through the actual Visa and MasterCard payment rates. So there already some effort happening on that side, and those rates arguably are better or not, but there will be some pressure, which I think might lead to different behavior much sooner than I think Rahul is anticipating.
Lovely.
Looking forward to that day.
We have a side bet on that one, Rahul.
To help with the forward-looking, our next hot topic briefing, I wrote topics in there, is an AirMeet session with our advisory board looking into what we think we'll see in 2022. It's on the 25th of January. There will also be an opportunity for networking afterwards on AirMeet, so you can sit down with all the members of the advisory board. But that is for next year. For now, thank you very, very much, Anthony, Natalie, Rohit, Rahul, everybody who joined us and everybody who supported our agenda for this year. Big thank you, and we hope to see you soon next year.